Based on the action in the advanced decline, it's the black line, okay, Williams sees a cycle of rallies and sell-offs that seem to repeat itself. This chart goes back a year, and you can see that the forecast, the red line, tends to move in tandem with the actual advanced decline indicator, although it's more exaggerated. Keep in mind, these cycles track the direction of a given move, but not its magnitude. They help predict when something will go up or down, just not by how much. You can see where we are, okay? When you project that cycle out, it suggests that the market should rally from here, right here, through the end of September, hopefully, okay, with another big decline coming in October. But if this pattern holds true, Williams says you're going to want to buy again at the end of October, right here, okay, looking at another major run as we head into the end of the year. And that's just one bullish forecast out of many. Check out this chart of the CBOE volatility index. That's the VIX for short, going back to February. You know we love the VIX, also known as the fear gauge, because it's such a fabulous reflection of the overall level of panic in the stock market. As I've told you before, the VIX and the S&P 500 tend to move in opposite directions. When the S&P rises, the VIX falls, and when the S&P falls, the VIX rises. It's a pretty ironclad correlation, and it only breaks down when the market's about to make a major reversal. So Williams is on the hunt for times when traders are more fearful, more emotional, as measured by the VIX. He thinks there's a cycle involved, and you can see this cycle in red on the chart. Okay? So far this year, it's been a pretty good indicator. It captures the swings in the volatility index. If you can predict the action in the VIX, that's a terrific tool for calling tops and bottoms of the S&P 500. What happens when Williams projects that volatility cycle forward? Well, you get a big spike in the VIX right about now, okay? Right about now, which coincides with the recent market-wide turmoil. But then he sees a big fall-off in volatility, okay? Remember, when the VIX goes down, the stock market goes up. So this volatility cycle suggests it's time for the S&P to rally. Again, really good indicator. And likely through the end of September. That'd be a nice run. That's why Williams thinks it's highly unlikely stocks will go much lower. The volatility cycle has run its course, so now is the time to buy, right into Labor Day. Finally, there's the chart of the E-mini S&P 500 futures, which track very closely with the underlying index. When you look back at over the past 10 months, Williams sees a very dominant 80-day cycle that keeps repeating here. And when you project it forward, the red line again, you see we're poised for a potentially major rally, or at least an extended move higher. Remember, these cycles don't tell you how big the move will be. They just tell you when a rally or a decline is likely to take place. Put it all together, Williams has three different bullish forecasts here from the advanced decline, the volatility index, and the actual S&P 500 itself. They're all pointing to a market that's done going down and ready to rally, at least for the next month.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.